It's closing time at the farmer's market, and one stall still has a crate of tomatoes left. So the seller drops the price, $1, then 50 cents, then a quarter, cutting it again and again until the very last tomato is gone. And that little dance goes further than you'd think. Because underneath that markdown is the same rule that sets almost every price you'll ever pay. At one exact price, the number of tomatoes people want to buy lines up perfectly with the number the seller wants to sell. Nothing left over, nobody turned away. Economists call that point equilibrium. That's exactly what the seller is hunting for, one price cut at a time, nudging the price down, watching the crowd, until buying and selling finally match. And it isn't a range or a rough ballpark. It's one specific price, the only one where nothing's left sitting in the crate and nobody's left wanting more. But what happens if the price lands somewhere else entirely? Price it too high, and sellers bring more than buyers want. Crates pile up unsold. Economists have a precise word for that gap: a surplus. Price it too low, and buyers want more than sellers brought. The crate empties in minutes, and people walk away with nothing. That's a shortage. Neither one sticks around for long. A surplus nudges sellers to cut their price. A shortage lets them raise it, pressure pulling the market back toward that one matching price, though never in a single instant snap. Push a little further, and you'll find prices that refuse to budge at all. Cap a price below equilibrium, like rent control, and you get a shortage that never clears, because the price is no longer free to rise and fix it. Set a floor above equilibrium, like a minimum wage, and you get the opposite, a lasting surplus. But only if that cap or floor actually lands above or below the matching price. Set it anywhere else, and it does nothing at all. Either way, some trades that would have made both sides better off simply stop happening. Economists call that lost value, deadweight loss. And markets often respond in the shadows, with black market trading or sellers quietly cutting quality instead of price. So next time you watch a price drop at closing time, you're watching the same invisible tug of war that sets rents, wages, and nearly everything in between. Always hunting for that one point where buyers and sellers finally agree.